All right, we'd like to welcome everyone to Trading Growth and Value Stocks. My name is James Boyd. We welcome all of you here today on this Wednesday afternoon. Welcome to all. Now, just real quick, we also have Ben Watson in the chat, so we welcome him. And today, our focus is on how do we find stocks like Google. I don't know if you've seen that in the last 2 days. Some of you might be thinking the same thing. So let's kind of talk about some of those stocks that might be potentially quite strong, maybe growth prospects as well. Now, quick heads up, really going forward as of the first of the year, want to give you a quick reminder that we will also tuck the income stocks in this class as well. And historically, we used to call this class growth, value, and income. So we'll kind of go back to that. So many of you that want to talk about income stocks, we will include that starting on January 2nd of this coming year, which is kind of nice because sometimes some of the categories of stocks like growth, value, or income, they might be doing better at other times, okay? So just real quick as we get started, remember the information here is provided for general informational purposes only. Also should not be considered an individualized recommendation. Schwab does not recommend the use of technical analysis as a sole means of research. So just understand that this class, we talk about fundamentals. We could also talk about macro and also intermarket analysis as well. It's not just technical analysis. Sometimes there's other things going on that might kind of have the technicals doing something, but it's also important to kind of understand why are the stocks moving the way they are? Could there be a catalyst of that actually continuing? Or maybe is there maybe a reason to think that the technicals might maybe worsen? I want to take a look at stock CVS here today, kind of talk about that among others. Now, also remember that when we talk about examples, we will do those on the Paper Money software application. Investing involves risk. And also remember, as we talk about examples today, they are just that. Now, what I want to do here today is just take a quick look at the market, 2 to 3 minutes. Some of the things that I want to talk about, some of the things that stood out to me here today. And then what we're going to do is kind of talk about kind of maybe some stocks that might have the potential, maybe, to maybe explode, okay? And we're going to try to look for some stocks that might kind of have some short-term technicals with it, but also something that might have some fundamental underpinnings as well. So let's kind of take a look at, I'm going to go just real quick to the SPX. We pulled up, let's say, the SPX, and we kind of said, what do we see here? Overall, decent day. I mean, I wouldn't say, look, it was unbelievable, but 50 points here on the SPX. Best thing about this, and we kind of said this yesterday, after this big bombs of a move to the upside, it's not unusual to think that you can't get some flags. Okay, now flags can be where they go, the pole is where the price ascends, right? The flag sometimes can be sideways where it just consolidates, makes some higher lows, or the flag is kind of more diagonal nature where it really pulls back more materially off the high. If you kind of said, which one do you want? You'd probably say, I'd like to take the flag that goes more sideways where there's not much giving back off the high. And if that's the case, then there's greater chances that this is probably not the top and it might go higher, which is like we said that 100 times this year at least. Now, probably the index that actually, and I want to kind of speak to this because this is a class on trading growth and value. Well, if you take a look at, let's say, the RUT, one thing I want you to kind of notice, a couple of these indexes, sectors, stocks, you're going to notice that many of them are kind of at diagonal spots of, let's say, potential support bounces. How many of you kind of notice that? Okay. Any of you notice that? Like there's like a lot of stocks that are kind of at the diagonal levels. I mean, I could pull up a number of them. Okay. So when you look at the Russell, okay, and you look at the Dow, they're kind of like, if you look at the index, you could probably guess that that's probably going to be the case. They're kind of right at that level. Now, what's the $1 million question? What is the $1 million question now? Are they going to bounce like they did before? That's always the question. How do you know it's going to bounce? And we had $1 for every time we said that, be multi-millionaires. Okay. So the biggest thing I want you to understand is some of the indexes like Dow, Russell, in the spot where it could bounce, red candles are not typically entry signals. It's going to need to see a hold, but they're in the technical spot of the bounce. Now, if we actually brought up just real quick, the number one pony here today, yours truly, the NASDAQ, brand new high here today. And like we said yesterday, you only had really sectors such as discretionaries, maybe technology, and communication. Those were the three sectors. There was really probably two of them that were quite strong. But the NASDAQ here today getting pumped to the upside to a brand new high. And you're going to see kind of what led that charge, okay? Well, if we go, let's see, just real quick to the NASDAQ, wouldn't be too hard to find it. It was yours truly, Google. We talked about that 2 days ago. We talked about the diagonal breakout and playing that trend, right? Now, you're also going to see Amazon's in there as well. NVIDIA's there. Microsoft there. We talked about that last week. Want to also bring up Avgo here today as well. Now, just real quick, I asked a question that was, and I'll just not say anything. I won't look at it, okay? What two stocks, if we talk about the communication sector, I can't look at the chart because it's going to give it away. What two stocks are the top two stocks in the communication sector? You got 5 seconds. 5, 4. And if you don't know this, you got left behind. It's horrible, okay? Yeah, it's Google and Meta. So when you talk about the communication sector, Google and Meta, those are the ones that actually, and by the way, if you pulled up the visualize, you would have known that. It was right there, okay? So that's why we always kind of say, like, if I said this sector, what are the top 2, 3, 4, 5 stocks? And those two top 3, 4, 5 stocks really represent a good chunk of what that sector could do. Now, we will also bring up the Google, mention that. I'm also going to bring up Meta, and I want to kind of talk about, is that done, or could there be more here, okay? Now, what I want to do here is, are there any questions for you? Anything that's kind of, you say, James, I need to get this off my chest, okay? Tell me if you have any, okay, good. It looks like you guys were on that, okay, good. Ben was the only one who got it wrong. I'll talk to Ben later. Now, speaking of Ben, okay? Now, remember, a couple other things that kind of stood out here today. Speaking of beef, okay? It's all about the beef. Well, now remember, this is not a futures class, but I want you to keep an eye on this. It kind of might relate to inflation. Saw live cattle prices go to brand new highs here today. Speaking of where's the beef. And if we actually take a look at, let's say, feeder cattle prices, you did actually see those. Those are not at brand new highs. I got a feeling that some of those ranchers are going to be driving some Cadillacs, some new ones, if those prices can hold and maybe go higher. Want to also kind of point out, when we take a look at gold, that was a nice little W pattern. We talked about that W pattern just the other day. We went down, ran up, pulled back, ran up, pulled back, kind of like couple W's there. Low, higher low, double bottom. And then today kind of getting up, yesterday getting above that middle of the W there, or even there. Gold, okay, looking a little shinier here. And remember that silver has kind of been like a slow moving little upside move here today. And I just want you to kind of notice that phenomenon. 2 days down, up, 1 day down, up, 1 day down, up, 1 day down, up, 1 day down, up. When you see that, what do you call it? Type it in. If you don't get it, tell me now, okay? So when you go down less than 3 days, only to see the price go up again, ladies and gentlemen, boys and girls, that's classic momentum. And if you're a trader, that is what you are hoping for, okay? So don't fall into this pit of like, oh, I want a deeper pullback. Not if you're trading it. Not if you want momentum. You want pullbacks less than 3 days and stay above the shorter term moving average, let alone maybe the 20 or 30. But really, most of the time, we want the prices to stay above a shorter term moving average to show that it doesn't have to pull back as deep for it to go up again. Okay, now let's kind of speak to we want to talk about some of these stocks from a technical standpoint, but also a fundamental standpoint. Want to pull up the stock, for example, Google. Did anybody remember the word of the week that we talked about last week? What was the word of the week? Just want to make sure you're following along. Because if we go over things and you don't really follow, then you're like, well, how did you define the example? Well, last week we did an example of Google, and we talked about the practice of finding pullbacks. Now, I've gotten like a lot of questions on how do you find diagonal breakouts. Well, if we kind of put our heads together, okay, and that means that we could solve it together. Number one is you would be getting what we'd call a trend number one, okay? So if you're getting, let's say, where the price is down like this, you would be looking for stocks that are below both moving averages, okay? That's the initial setup. The second part of that is they, were trend one, okay, and now turning to trend two. And what is that? Okay, it's the price above the 10-day moving average. Where have we said that before? Maybe almost every class. Now, the other part about that, so if we said, so James, on the column headings, if I just looked at, let's say, stocks that were trend number two, that would probably be a way to find diagonal breakouts? Yes, say yes. Now, the other way we could actually find that is, maybe also with that is, the whole moving average counter, okay? So in other words, if I found something where it was like trend two, okay, and the whole MA was, let's say, like 2, 3, that's really saying, hey, that short-term moving average has only been up for 2 days, and on the lagging moving average, it's only been up for 3 days. This is really what the investor would be looking for. Probably a trend two with a shorter-term moving average and the lagging moving average, something more recent. Okay, so let me kind of give you a sense of what that looks like. Can you tell me in chat if that makes sense? So I'm going to use an example given like a list of NASDAQ stocks, okay? And so what I'm going to do is I'm going to go to the trend column, okay? And what I'm going to do is I'm going to go to, let's say, example given like MU. MU is the only one on this list right now that's really showing, okay, a trend two. Now, what you're going to notice is, so that's the one we'd be looking at. Now, number two part of this is we're going to come over here, and what you're going to see on this case is, okay, we will be looking at this 10-hole counter. Why? Well, because if you're really starting to get a move, we should be seeing something like 1, 2. That is just counting the number of days where the moving average has been green. So to make this simple, what are we looking for? Trend twos. If we see a trend two, what are we going to be looking for on the whole 10HC? What does that stand for? It just counts the number of days the moving average has been green. Okay. Why does that matter? Well, it just comes back to timing. Do you want to get in something that's been up for 14 days in a row? Now, it would have been nice. Or are you trying to find something, smell that? Fresh crossover, fresh breakout, fresh bounce, right? Well, so that's the whole point of that. So if you ask me, like, how do you find them? That's how you find them. Trend two, something where the whole moving average is probably in the first 3 days. The other thing to do, which means you can't miss, is look at the Dow stocks, NASDAQ 100 stocks, and S&P 100 stocks daily. I do it every day. It takes 15 minutes tops. And you just rip down through the list and you visually look for them. Now, so one thing I want to kind of do, and by the way, the theses for all of our trade examples is one thing: price above 10-day moving average. Okay? Everything else is a complement to that, but that's what we really need to consider a trade and or investment. Okay? We're talking about stocks. Now, what I want to do is I want to bring up just real quick Google for just a quick moment. And what you're going to see is really on this chart, a massive Eiffel Tower candlestick. Now, if you've never been to the Eiffel Tower, you'll know why I called it that, okay? And if you take a look at this, you would have thought there's no way it's going to go through 190. It's probably going to come back down, okay? Well, it just entered, probably about maybe at 1 p.m. Eastern to 12 Eastern. It kind of was maybe down 7 points or so, gave a little bit back off the high. But by the end of the day, it was like, woo, and closing. Now, what we know here is I want to kind of now take a look at some of these kind of fundamentals of what we're seeing on this. Why all of a sudden did it just shoot to the upside? Was it that they saw our class? I wouldn't doubt it. Okay, I wouldn't doubt it at all. Okay, with a straight face. I'm not kidding. Okay, the one thing that I've actually seen is over time, portfolio managers, and I know many here in this valley, they've become more technical. Okay, it's not just fundamental. They have become more technical. And it's actually shocking. Okay, when you really get to talk to not just one or two of them, but 20, 30, 40, 50, okay, of them. And we've done that. I've done that over time, just years, just friends in the business, etc. The one thing that's kind of interesting about this is it kind of, had a little dividend. That's not earnings. And all of a sudden it breaks that diagonal and then it just spikes. Big gap, no retest, and we're way up here. Now, when we go back to the 3-year weekly chart, we want to kind of say, well, what happened to this? Now, this is where I want us to buckle in. We got 30 minutes, and I want to talk about a number of stocks and a number of trade examples. I want to kind of talk about, so this was kind of a technical setup. We talked about it last week, the diagonal breakout, okay? We got 2 example trades on this. Forget about those. I want to talk about a new one. Now, if we're talking about something where we're trying to get in, some technicians might just say, James, if this is potential support, I might set a buy limit order right maybe 1 or 2% off that line, maybe thinking if it dipped intraday, they might try to get in. Now, when we take a look at, let's say, go to the analyzed and then fundamentals, what you're now going to notice is, now I'm not going to speak to this, okay, but when you look at, let's say, a lot of these analyst firms or people that kind of give their opinions, they can't see the future, but it's pretty unusual that you see many of them kind of saying buy, okay? And that's their recommendation. It's not Charles Schwab's recommendation. I'm just saying it's individual firms that are not Schwab, okay? Now, disclosure, but you're going to see that they share their perspective of what they think. Time will tell if it actually really happens. Now, the thing is, for us, what you're going to now notice is, as investors, what is the investor really looking for? Well, we're looking for, this is the bottom line number, the earnings per share. This is the net income over the shares outstanding. We want to see that number go up over time. Now, it's not going to be linear, okay? It might not even be log linear where it just goes straight up. But we would like to see over time that that number is just gradually increasing. And it is, okay? Now, when we look at, let's say, even things like, let's say, the revenue numbers, you're going to see that if we go down to the bottom of this, you're going to see that if we go down to the bottom and say, what's kind of the revenue been, okay, over this current year? Now, revenue is just another way that would say sales, okay? Over the current year, it's up 14%. When you look at the net income, it's up over 41%. Now, guys and gals, you might say, well, this is awesome if it was a small cap company. That's the point. It's not, okay? And by the way, these numbers of 14%, 41%, this is not coming from where they were negative the previous year. So when you see these companies like Apple, Amazon, Google, Netflix, whole 9 yards, Meta, where they have double-digit growth like this, it's really kind of enticing a lot of investors to say, hey, fundamentally, they got some tailwinds here, and could that lead to the chart increasing? Trade number 1 that we're going to show here is we're going to try to do a buy limit order just slightly above this horizontal resistance. Okay, now, I'm actually flying blind today, and what I mean by that is I can't see the live stream, but I can see your chats, okay? So the biggest thing is I'm going to put an order here at 192, and I'm going to go day to GTC. Now, the dangerous part about this order is it's assuming that the price is going to fall back. Now, if we're at 195.40 or so, and we're at 192, we're just saying, hey, can it come down maybe $3 or so? If it goes down $3, it doesn't mean it's downturning. It might just be fluctuating. Now, number 2 is we need a target. Calling all technicians, boys and girls, ladies and gentlemen, what's the target? I need some help here, okay? It ain't just about me. It's about us, okay? What do you see as far as a target? Give me a number. And then now also I kind of need to look at the downside, okay? Now, I'm going to kind of put a number. I think this would be bad. Let's kind of throw this out here. Let's say we have this huge candle and we start trading below today's open and or low. Would that be a good or bad thing? I don't think it'd be a great thing, okay, because now it's kind of reversing all that momentum. So I'm going to set that stop right below today's open. We're going to take 185.10. We're going to go less 2%, and we're going to set a stop at 181.40. Okay? Now, I'm going to tell you the difference between us, okay, and maybe other people that learn is we do lots of practical examples. I'm telling you right now, you are not going to get good just watching Ben or myself. You got to practice trade. I want to ask you, a part of this class is going into your paper money account and practice trading alongside us. When you do that, okay, what you're going to find is you follow along a lot more in what we're talking about. Now, remember, these are not recommendations. These are class examples. And then when we talk about management, you'd be like, yeah, let's bring it up because it's also my paper money account as well. Exactly. Now, what's the target here? Now, first thing what I'm going to do is I'm going to take this prior high, okay? So when we look at this prior high, you get about 181, and then you kind of have this little U pattern. Now, remember, last week we talked about U patterns, V patterns. This last week we talked about W patterns, okay? And some of us really enjoy those, okay, for good reasons. Now, if you take a look at this, now it doesn't mean it always goes up, but sometimes it could. Now, if we kind of measure from where the old area of resistance was, and then as it goes above the prior high, we've already gone past the 161. Beep, beep. Now, that also might mean that on our positions that we have, we might target. They might be at maximum gains. But if we're talking about the next, let's say, 261 extension, and these percentages are mathematical ratios. That's all they are, okay? We're taking Fibonacci numbers that create percentages, okay? And we're going to put that target right at 208. Now, why not 209? Because I'm going to imagine that my drawing is a little off, and there's a little saying that says I'd rather get out a little too early than stay in too late, and it doesn't go to the target. Trade number one, we're going to enter, try to do a buy limit order, target, and then a stop. And what I'm going to do for time's sake here is we'll just keep it at 100 shares, okay? Lisa says, choke my stop today to 186.90. Okay, so giving a little bit of room. But by the way, Lisa's comment is she's giving about $9 worth of room on a $195 stock. Sounds like a lot, but it's really kind of allowing that stock to fluctuate about 4.6%. So it's not huge, okay? The thing is, people talk about setting tight stops. The problem is you set tight stops, you can't ride the trend. So typically you're trying to let those stops, unless you're trying to get stomped out, probably fluctuate about 5, maybe 6, 7%, okay, to try to let the trend, okay? And if we go confirm and send, notice there's a commission, there's not a commission to buy the shares of the stock. It's the capital to buy the shares of the stock. So trade number one is Google. Now, what I want to do is I also want to kind of go back to one of the stocks that we've kind of joked about, and I want to bring this up for just a moment. Speaking of, let's say, past examples, okay? Now, I don't know. Some of you, all right, here, I got to do this, okay? So what you're going to notice is, let me scroll down here. Oh, yeah, this got funny. Okay, Costco breaks over 1,000, and so does the checkout bill. Question mark. Well, maybe not, okay? I ain't going to Costco, Martha. All right, a little fun there. Now, the big actually thing is, historically, we didn't trade. Let's kind of go back to stop for just a moment, okay? So on the example of Costco, 16 shares. Not everything's going to be 100 shares, okay? Purchase those shares at 927. It's at 994. Went over the target, okay? Now, what I'm going to do is let's kind of say the investor said, James, I would like to kind of profit take. I would like to. Now, why might the investor try to profit take? Why? Why might they say that? Let me see. This kind of goes back to kind of, now it could also be something to do with earnings. Maybe the investor says, I don't want to hold over earnings. Based on this chart, the investor might say, James, I'm kind of thinking about exiting because that diagonal line that we drew, when we talked about 1,000, we said it would be nuts to go there, okay? I went to 1,007 today, okay? When I saw that, I kind of posted on X and kind of thought, maybe a little humor there. So what you're now going to notice is it goes right up to the diagonal line. You're joking. You drew that right before this class. No, I didn't. Okay. Now, sometimes other technicians just see what other technicians saw. Okay. Now, what you're going to notice is when it went to the line, it faded back off the high. What does that mean? Some people were profit taking as you sat there and watched the position fade. Now, what we're going to do, now, why didn't you set a target, James? Well, remember, in our classes, we do in-class examples. I'm trying to involve you in that learning process, okay? This isn't a lecture here. So the biggest thing is what we're going to do is we're going to sell this example. Now, it's not to say you're never going to get back in, okay? And what you're now going to see is we're going to kind of wonder, could it fall back down maybe to the bottom of that channel? Where's the bottom of the channel? It's right around 940 or so, okay? Now, what I'm going to do is I'm going to go to Monitor. We're going to right-click on the ask price at Costco, and we're going to create closing order, and we're going to click Sell, okay? Now, I need everyone to say sell. Say the word sell. Now, you might say, James, I'm not going to play. Well, good luck in actually being good at selling, okay? A lot of times when people think about selling, it makes them uncomfortable. Sell, say the word sell. Sell, 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 sell. Until we sell, we don't make anything. It's just all unrealized gains at that point. Now, what we're going to do is we're going to sell. Now, if we had a target 1,000, it would just be over, okay? Now, it's going to say stock sell minus 16 shares. Could the profits been higher? They could have, probably. And what we're going to say, look, we're going to try to sell at that price. Now, here's the thing. Just because I put the order in doesn't mean it's going to fail. So tomorrow morning, I don't want to just be like, messing around. I want to be focused on, does that order of Costco fill? Put it in your calendar. Make sure it fills in the paid money count. We're going to go confirm and send the order. Now, James, what happens if it opens up a dollar or two lower? We're going to move the price down and sell, okay? I think a lot of people are so scared at selling, okay? It's not a bad word, okay? It is a 4-letter word, but it's not a bad word for a trader. Now, I want to kind of also go back to one of the stocks, and I'm going to go back to Netflix for just a moment, okay? Now, if you take a look at a stock like Netflix, this has been one that's been, well, it's been a horse to the upside. Now, what you're going to notice along the way, let's first go look at its fundamentals. Now, remember, when you talk about it, let's say Netflix, we're talking about it's a consumer staple. Is it? Well, for many people, it kind of is, isn't it? That was a trick question. It's a discretionary. You could say it's technology, but you could also say it's a staple. I mean, I got to watch something, okay? Now, what you're going to notice along the way, there's those cold dots. 1, count them with me. 2, 3, 4, okay? Now, those dots, and notice how they're a little higher than the previous dot. What is that telling us? It's letting us know that there are some higher lows on the price graph. Where's the next one? 5, 6, okay? Each dot sequentially higher than the previous one. Oh, thank you for telling me where the higher lows are. Now, what you're going to now notice is we get a little brand new high here today. Now, the move that we've seen in Netflix in the last, let's say, I don't know, 5 weeks, 6 weeks, has been unbelievable, okay? Now, what you're now going to notice is this stock is up 23%, okay, just in 28 trading days, 37 calendar days. What is going on here? Now, the biggest thing is when I go back to this analyze for just, and I want to go just real quick to, I just want to pull up, we're going to pull something up, and I want to go to the Schwab website. And what I want to do in this case is I want to take a quick peek at kind of what we're seeing on this company. Now, what I'm going to do is I'm going to go to the very top right. Before we enter that trade example, I just want to pull up kind of its fundamentals, kind of see where it stands. And also I want to kind of see where is it standing compared to its peers. Now, in the last couple of weeks, there's been a lot of discussion on certain broadcasting companies closing, consolidating, whole nine yards, maybe industry disruption. If these other different companies fold, where are they going to get the information? Okay. Now, what I'm going to do is I'm going to scroll down and I want to kind of just take a look and kind of see what we have here. Now, first off, doesn't pay any dividends. So anything that they make, 100% is actually going back into the company. It's not sharing any earnings in the form of a dividend with the investor. That's not bad as long as you say that you're not focusing on, let's say, income. Okay. Now, if you take a look at this expected earnings, okay, Q4 into next year and so on, sequentially higher for the most part, okay? Now, when you actually go down and look at this, you look at actual numbers versus estimates, pretty big these are historical, okay? So beat, and beat by a decent amount, okay? And if you look at the price earnings of a 51, we know that this is not your classic income trade or probably even a value trade for the most part. Okay, so this is a little higher. Now, what you're now going to notice if we take a look at this, who are their peers? Now, I do want to talk about two of these. We know that Walt Disney, Ben, might be historically gave an example on Disney. Disney, to some degree, has struggled. Let's just say that they struggled, okay? Electronic Arts, that has also been something that has, on the trend-wise, has not been that bad, but kind of maybe leveling off. But this one kind of right here, the TTWO, did leave a decent lower shadow. And some technicians really might call this a hammer, where it's hammering or chiseling out a support level. Come back to that in just a moment. Now, if we take a look at this, kind of by the numbers, investors, they're kind of maybe, I'm going to use the word, maybe if they're buying today and investing for the future, they at least kind of want to know what is the forecast. Now, who gives the forecast? The company gives the forecast. Analysts talk to the company representatives, CFO, CEO, etc., and they try to get an idea what those metrics might be. It's a forecast, okay? Now, if you take a look at this, you're going to see that which one is the highest. It's Netflix, okay, by 27%. And we're talking about earnings per share growth forecast, 3 to 5 year, 27%. Now, if we're talking about a $20, $50 stock, that would be a good number for a low price dollar stock. But if we're talking about something that already has a positive number to begin with, that's a lot, okay? Now, if you look at net profit margin, still 20%, and it's the second highest in this listing. Now, here's the deal. If the competitors are dropping off, what is their profit margins probably going to be doing? If their competitors are struggling. Now, if you have a struggling company like Disney, the company, for example, might cut the prices just to keep people from stopping subscriptions, okay? Now, the biggest actually thing is if the company actually thinks that, hey, our product is better, and we'll tell you how, they might even raise that price. And if people think there's value there, they actually might say, look, I'm going to dump Disney, I'm going to dump, let's say, Electronic Arts, and I'm going to subscribe to Netflix. Now, by the way, you see this all the time in many different industry groups. So what I'm now going to do is if we kind of come down to this to the bottom, and it's something I always like to look at, and you should as well, at least being aware of what are some of those internal trends. So when you look at the current assets, that's about a 50% bump on those assets. Liabilities, you got to imagine if they're having increased assets, they're going to have some of those liabilities, sure. But really what we really want at the end of the day is what we call owner's equity, assets minus liabilities, and show us the math. And what you're now seeing at the bottom, that equity is about triple what it's been in the last 5 years. Now, I'm going to tell you this right now. This stuff is here, and people say I'm a technician. The one thing I've seen in 25 years of doing this, I could show someone a rise, just a trend that's going to the upside, but a lot of times they struggle just to get in the technical trend because they don't know what's really driving the company to put real money behind it. So the purpose of this class is when you talk about any investment, it's not just saying here's what the price is doing in the volume. we kind of want to know, are there some fundamental underpinnings that could drive the technical trend? Now, let's pop over to the IS, the income statement. When you actually look at kind of these numbers, pretty solid numbers over the last 5 years, okay? Now, by the way, when you say 1,000, we're saying a billion. So when we say 20,000, we're saying really 20 billion, okay? 33 billion, okay? That's a lot of TV watching, by the way. And when you actually take a look at these numbers and you look at, let's say this, we could just look at net income. That net income is tripled, okay, in the last 5 years. So if you're an investor and you said, hey, I'm looking at this business where the net income is tripled and the future growth is supposed to be maybe almost in the 20-ish percentile range, I mean, I don't know if you could see many better examples. Does that mean it's going to go up? Are we guaranteed that it's going to go up? Nope. Okay. It's just kind of what the run rate has been up until now and what the forecast is. So nobody sees beyond the right edge. That's called the future. Okay. You cannot see behind to the right of this. It's just like what a technician does. They go day by day by day by day. They're riding that trend. So the second trade we're going to take here is we're going to right click on this. We're going to go to buy custom. Now remember, by the way, what I'm going to do in this case, I'm going to go buy custom with stop. Okay. Lauren says Squid Games 2 coming out. Now it's kind of funny. So my older son, I have his so my third oldest son, he's down in Ecuador. He had a PS5. My oldest son took his PS5. He said he told him that he was going to borrow it. Well, so when you talk about these games, okay, needless to say, my son down in Ecuador, it just kind of almost brought him to tears that someone took his gaming console. Now, you and I might not do that per se or feel emotionally that strong, but some people do, okay? And it's like some people in their coffee, okay? Now, the biggest thing, what we're going to do is we're going to kind of move it to the current price, $936.56. We're going to go down to the stop, kind of put that right there, and where. What I'm going to kind of do is take this recent low, and I'm going to kind of say, look, if we go below that low, which is sitting here about 903.50, and if we go less 2% of that, we're going to set a stop at 885, okay? Now, when you take a look at this 885.43, okay, dated GTC. By the way, I want to kind of show you this, okay, heck, we're talking about trading, right? What's another thing that will kind of stop someone, even if they see a technical trend, a fundamental trend? The bottom line really comes down to is they're not comfortable with taking the risk. The end, okay? So I'm just going to look at stock. I'm going to make this fast. Stock entry price, okay? And that stock entry price is 936.56. If I said the support was, let's say, 903.50, and if I said that stop, let's say, was 903.50 less 2%, okay? So what I'm trying to really find out is the risk per share. Well, now we really need to say forecasted risk per share, okay? Because, well, we don't know if we're going to get stomped out at that level. So I want to kind of find out is, if I risk $51 or more, how much of that is that compared to what we're paying for the stock? And if we just took 51 divided by, let's say, the entry price potentially, the answer is 5%. So when you're trading, if you could risk 4 to 5%, that's just about as good as it gets, because you got to allow for some price fluctuation. If you said, James, I'm risking 5 to 6%, slight elevation, okay, off support. And if you said, hey, James, I got this example and I'm risking, let's say, 6 to 8% of entry price, okay? So I kind of think of it like this. If someone says, James, I got in and I'm risking 4 to 5% with a stop underneath support, I'd probably say you're on the first day of the entry setup. If you said, James, I'm risking 5 to 6% of the entry price, you're probably on the second day of entry of the setup. And if you said, James, I'm risking 6 to 8%, of the entry price, you're probably the third day plus of that most recent entry. So the day in which you get in can make a potentially material difference on the percentage that you're risking of the entry price. Okay? Yeah, by the way, that ain't new. We've been talking about that for 20 years. Ask Lisa. Okay, now here's the deal. If we go back to, let's say, confirm and send, we got to imagine how much, what's capital size. If I said, for example, that I'm going to, let's say invest, let's say $8,000, share-wise, what you're going to now notice is, if I did this, how many shares is that? Well, if I did $8,000 of capital, it's going to be 8 shares. If we said, no, our typical size in this account is 15,000, it's going to be 16 shares. Really like that feature right there. Get used to it. We're going to go to confirm and send. And now what you're going to see is we got the entry price based on a certain amount of capital that we're willing to invest, 16 shares. Why? Because that's what we're willing to risk based upon the numbers that I just showed you. Okay. Don't have a commission for the shares. It's the capital. Okay. Now, I did not put a target on this, and I'll fix that. I did not put a target on Netflix, but if we went back and kind of just said, why didn't you put a target? I'm not really sure if Netflix has a target. Okay. Now, not everything's going to have a target, especially if we're kind of above a lot of these fib levels from recent. Now, I kind of want to pull up just real quick in closing here. One of the stocks that we're looking at that kind of has some strong upward trends, it has earnings tomorrow, but we're going to keep an eye on is Avgo. Okay. The Avgo, $183 stock, pushing up against resistance again. And if you look at this, we kind of see on a weekly chart, what type of candle do we see on a weekly chart? And if you look at that, that's a long tail. And where did the tail go down to? Where did it go down to? The rising 10-week moving average. Somebody was watching. Somebody. Okay, I'm not saying it was somebody here, but I'm saying someone literally to the pinpointed it. Okay? Keep an eye on Avgo. Earnings actually tomorrow. Now, the other one I'm also going to kind of say we're going to keep an eye on just briefly. When you look at CrowdStrike, now they had that melee with kind of, the airlines and the threat of suing by airlines, etc. It's come all the way back. Okay. In the face of all that, okay, Tesla has also been one that has been very strong. Elon Musk may be enjoying that. And the last two that I'll bring up is when you look at, let's say, CTSH. That's also another one that kind of has like an ascending triangle with some fundamentals that are fairly decent. And if you look at another one, PCAR, that's another one that's kind of getting into the apex of the triangle as well. And the last one as we close here, Ulta. Okay. Ulta has been in a downtrend. Kind of looks like a Lulu example. Has been in a downtrend, trying to get a bounce here. Keep an eye on Ulta as it broke out post earnings, setting up for the bounce. So a couple stocks that we'll keep an eye on here today. So our examples we did was Google and Netflix. Okay. Tomorrow we'll actually do the class on Trade the Trend. We'll talk about more about those past examples. Your homework assignment, I want you to go out there and try to find some stocks that have double-digit revenue growth and earnings per share growth. Okay. I want you to find some of those stocks that are breaking out diagonal, horizontal, crossovers, all the above. You should also be thinking about, are the stocks that you're looking at, are they some of the stocks that in their industry group are the top 2 or 3? Because those are the ones that are probably going to be the ones that have the trends that as a fundamentalist and a technician that you're probably looking for anyway. Okay. Now, I'm out of my time here today. I want to thank Ben for answering those questions in chat. Also, I want you to kind of notice just real quick that in the link that I just sent you, this is a list of prior classes that we taught. So if you kind of want to get a gist of how we teach, why we teach, what we taught, etc., there it is. You can just reach out and grab it. Okay? Save that in a bookmark. Also, if you're not subscribed to the Trader Talks channel right on YouTube, do so. Okay? And so just recognize that, for example, as you come to class, This is where we come together and talk not just with technicals, but also some stocks that might have some fundamental tailwinds as well. Why do we care? Because I think if we understand what the company does and how they're making money and so on, probably gives us more confidence to trade what we actually see. That's what I've seen, okay, in 25 years of doing this with clients. So as we wrap up here, want to give us a quick reminder that with what we discussed, it was done for example, illustrative purposes only. Remember that all investing involves risk. Stay tuned for futures tomorrow morning as well as we kick off tomorrow morning. Have a great evening, and we'll see you back tomorrow. This has been the class on trading growth and value stocks. Take care. Bye-bye.